Hey, what's going on? Dr. Sean J. Harris here with Generational Wealth Academy, and I want to share with you my 12-step program. That's right, 12-step program to achieving wealth. The first step you want to do is be able to shift your income. One of the things I talk about is understanding the rules of money. The first rule of money is to be able to, first of all, create income. And ideally, you want to be able to create a high income skill set. A high income skill set is a skill set that will allow you the ability to earn and generate at least $10,000 a month or $120,000 a year. So that would be considered a high income skill set. Now what we do is once we create the income, we got to learn how to hold on to the money. You don't want to just go spend it as soon as you get it. Now, the thing with that is that we're not going to just hold the money under the mattress or in an envelope in the closet. The goal is to hold that money to be able to invest it and grow that money, which is the third rule of money. So the first thing we want to do is we want to be able to make a shift in our income. That's the first step for achieving wealth. The second thing is we want to be able to start a home-based business. Now, a lot of people say, well, Sean, I'm not entrepreneurial mindset. I don't have the entrepreneurial spirit in me, but it's always good to still start some type of a home-based business. No matter what you do for a profession, you may love what you do professionally, but understand you can also do a consulting business in that same field. So if you're an accountant for a big company, well, you can still do accounting work on your own as well to be able to create income. And again, this ties back into step number one, which is to make the shift in your income. Be able to have that extra boost, because more income is better than just one stream of income. So that's something you definitely want to do. The other thing you want to do is to be able to establish an LLC. I always recommend all families start an LLC. Now, you may say, well, Sean, again, I love what I do. Why do I need an LLC? Well, if not just for the tax benefits, it's worth getting an LLC. You can do so many powerful things by having an LLC as it relates to tax deduction, different incentives that are granted to you by being the owner of an LLC. Most LLCs are anywhere between $125, $150 in most states in the U.S. You just go to your Secretary of State for your particular state and get details on that for starting your own LLC. The fourth step is to add children as members on your LLC. For all of our LLCs, our kids are founding members of each LLC. This will prove invaluable down the road for multiple reasons, for voting rights, for being able to generate income. It's just so many variables by adding your kids to the LLC that is tremendous value add. Next thing you want to do, step number 5, is you want to be able to establish business credit. That is everything. A lot of times people say cash is king, but business credit is king. Now, you tend to get more business line of credit than you will for your personal, but your business credit will be determined by your personal credit in many instances. So you want to definitely make sure that you build on that as well. The next thing is number 6 is you want to be able to pay your kids $12,000 a year for being employees of your LLC. Remember, I told you there's so many different advantages. So here we have 2 children that are under 18. So we're able to deduct $24,000 right off the rip as it relates to business deductions, because kids cannot be taxed. Okay, so that's another insight that you want to know about being able to have your kids in LLC and have them on your LLC. Number 7, the 7th step is fix your credit. I can't stress that. A lot of times we were brought up thinking that credit wasn't important or credit is a bad thing, but you have to know how to leverage credit, how to grow credit, and build your credit. And there's so many different things you can do, different tools you can use to increase credit. I have courses on that, but that's one of the key things you want to do is you have to build your credit. Number 8 is to be able to add your children to an unsecured credit card as authorized users. This is a way that you can start building your children's credit as young as 8, 9, 10 years old. There are several banks out there that doesn't have an age limit that will allow you to add your children on as authorized credit users. But here's the key. You got to make sure that you have good credit. That's important. You have to be able to do that, and you have to make sure that you maintain good credit, because whatever your credit does is going to reflect and mirror back on their credit. So that's super important. Number 9, you want to be able to eliminate your debt. You can't start amassing wealth until you get out of debt. Now, you have good debt and bad debt, but most people have consumer debt, which is bad debt. Good debt would be where you may take on an asset producing income, or asset where this asset you may be in debt for, but it's creating you more revenue and capital flow, cash flow. Okay, so there is a such thing as good debt, but you have to know the difference. But you got to get rid of that bad debt first, and there's ways of doing that. You didn't get into that debt overnight. You're not going to get out of it overnight, but there are strategies that you use to be able to systematically and methodically eliminate debt. The 10th step is creating an emergency fund, a just-in-case fund. I wrote a best-selling book called Just in Case Money. You have to think about it. In your car or your truck, in the undercarriage or the trunk, you have a spare tire. The purpose of that spare tire is just in case of a flat, just in case of a blowout, in case of an emergency. Well, the same thing with our income. We should be able to have a just in case or a spare income in the event of an emergency, in the event of a financial blowout. Okay, so that's super important to be able to start creating an emergency fund. Now, this emergency fund does not mean I need to dip into it to go shopping. It doesn't mean I need to dip into it because the washer went out. You should just have money to decide to take care of replacing an appliance. An emergency fund is truly that, just for emergencies. Okay, so you never really want to tap into that unless the bottom just really fell out. Okay, the 11th thing you want to do is you want to be able to invest in wholesaling. Do things where you can create a wholesale value. One of the key things I like to talk about, for an example, is wholesaling real estate, for an example. Now, a lot of people got into single-family residential rental properties where you may create a certain amount of money, but your immediate gross profit in the year may be, let's say, $300. But using that same money to buy that one house, you can invest in something like mobile homes, for an example. Something that we've done to where you can get X amount of mobile homes. Let me give you an example. If you spent $45,000 to purchase a single family residence for rent, well, let's say your immediate gross profit at the end of the month was only $300. And let's hope nothing goes wrong with the property where you had to invest that money into repairs. Well, that same $45,000, let's say you bought 9 mobile home units at $5,000 a piece. Okay, let's say each one of those generated a revenue stream of $300 each. That's $2,700 a month as opposed to $300 a month. So you see the difference there. So you got to be able to figure out how can you wholesale an item. Another example here that you see on your screen, you have an item that sells for $7, but why not be the wholesaler and buy that same item for $1.50 and sell it for $7, which means you keep an immediate gross profit of $5.50. Well, $5.50 times 300 units, that's $1,650 you just made. So it's all about knowing how to strategically position your money to be able to get the highest and best use and maximize the ability to be able to use that money effectively. And the 12th thing, step number 12 you want to do is you want to be able to reinvest in yourself and your children. I can't stress that enough. You got to be able to reinvest back into yourself and into your children. You got to be able to change what's going into your eye and your ear gates. You got to be able to read, be able to absorb new information, get around new associations, and to be able to absorb new information. And most importantly, you got to know how to be able to use your time wisely at its highest and best use. Here's a litmus test as we close out as far as how I qualify my time. I ask myself, is the activity, event, or thing that I'm going to participate in, is it going to increase my net worth or lead to my net worth being increased? If the answer is no, I'm going to have to reevaluate if I'm going to engage in that activity. However, if that activity is likely to increase my net worth, then more than likely I will give it strong consideration as far as using my time to indulge in that particular activity. So guys, those are my 12 steps of how to achieve wealth from the very beginning, from scratch. These are some of the foundational principles that you have to follow in the blueprint. So guys, again, I'm Dr. Sean J. Harris, and I know this was a great value add to you.